Guys, we got to prepare ourselves for a cryptocurrency depression. Today, the Fed raised interest rates again, and that was to be expected. They're probably going to raise rates, through the end of the year, through 2022, maybe into 2023. And, we've got a lot of issues in a lot of markets. Stock market gets hit. It's pulling down crypto. One of the most liquid assets, obviously, that we have is cryptocurrencies. That's a lot more liquid, potentially, obviously, than real estate, but stocks and options are pretty liquid for the most part. So you do have that, but cryptocurrencies are liquid. You can get out of that a lot faster than you can the cars or the real estate. And it's one of those things that people are gonna, if they're having a situation with their living expenses, or let's say they had a rental property and they can't find a renter, and then that's putting extra pressure on them to pay their mortgage in their primary residence, and they have some Dogecoin, or they have some Ethereum, or they have some Bitcoin, they're probably going to sell that then to make themselves homeless or not be able to fill up the gas tank. Gas prices are rising. And we just have to just take into consideration overall, we could end up in a Great Depression situation, something that's, basically the everything bubble that we've talked about for years and years and years. People have touted this, and the can keeps getting kicked down the road. What's going to be the straw that breaks the camel's back? Everything looks like it's cookie cutter, just set up to be another 2007, 2008, 2009, basically collapse. And what are some of the reasons why I think that crypto could or may not end up in this extended bear market and end up being an absolute crypto nuclear winter in an absolute just complete depression level stuff? For one, there is the previous two cycles that people are going to really have that in their mind, that Bitcoin dropped 85% last time. And then, so there's a little bit more of a track history. So you could have money getting thrown at that if they don't feel that the cap rate for, for real estate in most cities is enticing enough, and they're worried about buying properties at the wrong time and then losing a bunch of equity over the next 2-3 years. So there's that. They could feel that gold and silver have underperformed and have really not kind of played out as this sort of hedge against inflation. So they could be a little bit, kind of sick of that. They could feel that, well, cryptocurrency is sort of leading the charge as far as markets that have crashed. So you could go for that, feeling that it's pretty much through the majority of its downfall. And, we have the ability to borrow against our Bitcoin, our Ethereum, our Dogecoin, our Litecoin. We have the ability to borrow against it a lot easier this bear market than we did last time. One of the red flags, though, I see, there's a few red flags. First of all, you still have extremely high prices on some of these NFT collections. And I think that when you usually put it kind of into check, would you trade this supercar here that I'm sitting in for a pixelated, ape? And it's, I think when people think about it that way, it just seems kind of like sort of absurd that you would, trade a hard asset or tangible asset into something that's just a picture that you could basically just, whatever, do the ear, take a screenshot of it, do the mirror image, and then like be popping up your own NFT collection of this thing that's just a mirror image of something else that's being sold. It's just a very, very weird thing. Now, would it make you more money if you traded this, this car, for instance, for a pixelated ape, and then you were rubbing shoulders with other people with money that wanted to start this and that project? It might end up benefiting you. Maybe you're able to make money off of it, but I just have a hard time believing that a lot of this stuff is going to stay as high as it is through this bear market. A lot of projects obviously getting pressed, and we have these. Just imagine just taking a beating just over and over again when these prices collapse, and it's just wearing people out, and they just get drug out and stuff like that. And so there is going to be a time and a place, but I'm going to tell you what my main strategy is going to be to come out of this kind of bear market and kind of ride out, and then slowly kind of like accumulate. And I've said this before, in the last two bear markets, I've seen people jump in way too soon. And it takes time. So you got to utilize the right strategy, kind of, preserve as much energy as you can, and then, kind of stack throughout the time. And there's going to be other opportunities to stack various different projects. There's going to be new projects that are going to pop up. They're going to have more hype to them, and you're going to have time. So one of the things that I'm going to do, and I've pretty much come up with a stablecoin strategy that it's going to earn around 12 to 14% currently, without putting too much pressure on any one project or putting my reliance in any one particular project, and or any one particular blockchain or any one particular platform. And it involves basically the Gemini Dollar. I think that the Gemini Exchange is trusted enough. The Winklevoss twins are trusted enough that having the Gemini Dollar, which is paying 7.15% currently, that would be one of the pillars of the thing. The HIVE Dollar, I do believe that it will hold close to the peg, or if it does drop in a capitulation event, that it will pop up back close to $1 with the metric, or just with like the structure that's in place currently on Hive. There's various different reasons why the HIVE Dollar, I feel like, will hold up better than something like, the Terra Luna system, and that UST basically lost its peg, and various other algorithmic stablecoins have lost their peg. And various reasons why I think this is because you have to pretty much kind of go through Hive to get to the HIVE Dollar. So Hive itself has like buying pressure even if you're trying to get to the HIVE Dollar. And then secondly, there's various debt levels, and it's like this whole economic situation. So there's a lot of people monitoring it. And then secondly, one of the most successful blockchain games currently is Splinterlands, which it's on Hive. So that is helpful that, you can get on that chain and stuff through Hive. So that brings demand to it and stuff like that. And then there's the premise of blogging, and people are earning yield off the blogs and the curation and stuff like that. So there's real world kind of usage to what's going on Hive, that I think, and enough people have been around this and have kind of played out. The HIVE Dollar has already went through a bear market. And more as kind of Steam, the Steam-backed dollar, learning what happened with Steam, and then that's kind of rolled into the HIVE Dollar and stuff like that. So they've already kind of seen sort of what could happen and how to sort of regulate this and try to keep it towards $1. So I think it will get back. And then also, I think that Binance USD is one of the safer stable coins, so reliance on that. So if doing liquidity pools between like Binance wrapped HIVE Dollar and BUSD, there's earnings you could get with that. And then there's other lower paying stuff that's like USDC and BUSD, and then just keeping your HIVE Dollar in the savings account is paying 20%. So a lot of people may be fearful of that, and I don't think that everybody should go all in on that. And I think that you should create basically, a structure that doesn't overdo your reliance on any one blockchain, any one platform, any particular coin. And then I think that, it can be a balance and stuff like that. And I'm going to go into that more. And then basically as you earn, and as we long tail out, then you take some of the earnings off of that to start stacking Bitcoin, stacking Ethereum, stacking Dogecoin, stacking Litecoin, all these other, stacking Monero. And then guess what? You can take that stuff you stacked, and then you can lever against it on these money markets like Venus, and then you could basically borrow stable coins against it, and then like put that back into the stack that's earning more money and stuff like that. So over time, you kind of expand out. You got some of the stuff on the money markets. You got some of the stuff, earning additional and liquidity pools. You have certain stuff that's like, stake that you're earning. And, at the end of the day, it ends up being kind of this balance and stuff. And then hopefully, none of them get derailed. And if one of them does, or the situation changes with one, it won't take you completely out of the game. And then ultimately, when you've rebuilt the base and rebuilt your, entire stack that you're going to go into the next kind of bull market with, as long as we're going up and to the right, and you borrowed against it, and your percentage, like your loan to value ratio is kind of low, you should be able to ride out of it fine. Or don't use any leverage and just, use it, or just, wait until these capitulation events and then just stack Bitcoin and Ethereum and just keep that in cold wallets. All that's perfectly fine. Whatever your risk tolerance is, I'm just telling you what I'm going to do with the stable coins, because, and this become this increasing talk that obviously, the dollar has relative strength to some of the other fiat currencies out there currently. And if you have the stablecoin strategy and stuff and get closer and closer and closer, and then when you have good buying opportunities, you buy into those and kind of flip, and then be ready for that capital appreciation when we go, hockey stick parabolic in the next bull run. But that could be an extended time, guys. That could be 2 or 3 years. Could be a long time. And hopefully you're able to take enough energy into this next bull market that you're going to end up being handsomely rewarded, and it's going to make sense to sort of take on this type of risk during the bear market. But again, like I said, a lot of people are going to jump in too early, and there's stuff that has to happen. The NFT market on some of this stuff is going to have to like collapse out more. Michael Saylors or a guy like that, he's probably going to get himself into more trouble. He was just buying more Bitcoins. Guy's got an addiction. They got 130,000 Bitcoins. If Bitcoin does go depression level and goes to $8,000 or something like that, which is not outside the question. Now, I don't know if it's going to go that low. If it does, it would happen very quick. But it could go that quick because of whether it be Mt. Gox coins being released, or Michael Saylors getting liquidated, or some of these other big holders and stuff start offloading it. Maybe some miners, some miners maybe have held on to their Bitcoins and their Ethereum and this and that. They could get pressed out to a point where it's like, we're going to have to liquidate this stuff. We're going to go bankrupt. We can't keep the lights on. They might have to sell out large blocks. And they underestimated the amount of time that the bear market's going to take. So a lot of people are going to get pressed out over time, and it's going to feel really bad. But we do have the ability to borrow against our coins now, a lot easier than we did last time. But crypto has never been through a recession, and this could be a very, very vicious recession. I think it's a lot worse than people think. Why do people not take into consideration that this could be as bad as what it could be? Either they have not been through a recession previously, or they just don't want to admit it to themselves, because maybe they did pick up some properties in the last couple years, and they don't want to hear that. They don't want to hear that, oh, real estate could drop 50% in a place like Phoenix. They don't want to hear that. They don't want to think about that. So a lot of people are going to be in denial with some of these markets dropping, and I feel like it's going to get a lot worse than people think. And people are pressed out as far as with the food prices and the gas prices and stuff like that. People are exhausted with this. So there's going to be more exhaustion to come, and we're just in the first inning of this whole thing. And the Fed is expected to keep raising rates, and people are going to get the wits end and everything. So we have to survive this, and one of the ways I'm going to do it is through this stablecoin strategy, and then slowly kind of feather this money back in as time goes on. So anyway, guys, what do you think? Could we have depression level Bitcoin prices? Depression, like the worst out of the last couple cycles. Could this be the worst bear market that we see, just because there's been this over exuberance into maybe NFTs or various deals that have been structured, whether it be through FTX or crypto.com with these different sports arenas? Are they going to make it through the bear market? Are they just going to come unhinged? Anyway, guys, please like and subscribe to this YouTube channel, and follow me on all social media at Brian Phobos, YouTube, Instagram, Steemit, Twitter, Hive, DTube, everywhere.